Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, April 21st, 2014. And this is brought to you by Triton Wave Consulting, home of the Triton Waves. The Triton Waves are early warning market timing indicators used in all time frames in all markets worldwide. Well, I hope you're enjoying your weekend. Happy Easter, everyone, and happy Passover. And let's jump in and take a look at the headline news. I just pulled up Google to see that the Geneva peace deal is in tatters after 5 people were killed in the Ukraine. So the peace deal was involving the Ukraine crisis, and we'll have to wait and see what happens. Right now the S&Ps are up 150, 175. It's about 20 past 5 Central Time on Sunday evening, and I'm not sure that's having a very big effect right now, but what I did want to show you was just this, how the S&Ps, the ES space pound F, which is a continuous chart on 24-hour chart. The last time it hit the minor wave was back in November 16th, 2012. So it's been a year and a half now, or a little less than a year and a half. So it stayed above this wave the entire time, and even the 21 has stayed above the 55 for most of the time. Okay, but I wanted to show you this little breakdown right in here. At this point, about 4 or 5 days ago, the heavy green line went below 0. It's the first time that's happened since way back here in December 5th, 2012. So this went down a little bit and then came back up while T3 and T4 were still above 0. So it remains to be seen, with this dipping down and T1 dipping down, whether the same thing happens. It just stays flat for a while and then moves up, or like flattish here and then moves up, or whether it just tanks. One of the things about this is that I'll expand this chart a little bit and get rid of some of those lines, is that I don't have the volume charts up here, but these days with the big candlesticks on the downside, heavy volume. These 2 up days were light volume, these 2 were heavy volume, and these 4 have been light volume. So it seems like this is a topping action, and if you've been following me, you know that I have that my line in the sand on this is right around. This is the weekly chart now. My line in the sand is around 1838, and we're at 1852. So this may be a very definitive topping action. We'll have to just wait and see how this rolls out. Myself, I think we're going down. I mean, my positions are all on the short side of the put side. So let's break this down a little bit into the 55 here, and let's see what's happening. Let's see here. There's not much you can tell on that. Can't tell anything on that. Let's check out. Okay, so on the daytime sessions, on the 144 chart right here, we see that T1 through T5 are now below 0 for the past 3 or 4 trading days, and it didn't matter that it bounced off this minor trend line of the Triton wave minor. This is below 0, this is below 0, and 2 of the 3 waves are below 0 here. So I'm looking at this as a topping action, probably like this is like a little bit of a head and shoulders. It may go sideways up just a little bit, my thinking right now is that if we get a little upside on Monday or Tuesday, it's a very good opportunity to short the market and some of these stocks, and we'll get into some details in a little bit. Now, on the 144-minute continuous time chart, so this makes this a live chart. We can see how this is moving. You see the action of the last few days is down, and then about a 50% recovery, down again, and then after it hit a 50% recovery here, it kept on moving up to this area right on here. But as I say, on lighter volume, and even though it came back up to a parallel price right here from about 5 days ago, all these waves continue to be below zero, which is not a very good sign. So on the much shorter one, this is an hourly chart, on a 24-hour chart, you can see that these waves are definitely above zero and where they went above zero. So for those of you who are day traders, well, actually, this and this happened when it was 2/3 down, so you really have to go even to a shorter term chart. But you can see that the general trend for the much shorter term is more up than it is down, but the bigger trend on the daily doesn't look that promising to the upside. And probably the best representation here is the 13-minute continuous chart, and I like this because it captured the best part of this move down here when these went below zero just a day before. So you can see that. Now they did come back up and spike up a little bit, and T1 got taken out. You may have been shorted out, but then you had a chance to get right back in. So we're talking about a 2 or 3 point difference. But then when it came back down here, so it recovered above zero, almost within 5 points of the bottom, and then this line here is right about here when it starts descending. So you really got to be alert and pay attention to what's going on here. And this comes all the way down here, moves up above the zero line on T1, and then confirms it with T2, T3, and T4. And this has had a really, really nice ride. Again, you need wide stops because of what happens here, but actually on a 144 tick chart, you can see this action. So if you're a day trader and you're hovering over a computer, these are really nice plays. I'll show you that in a minute. But even with these moving up in this general direction, up about the last 20 points of the S&P, this has basically remained flat on T1 as T2 keeps on falling and T3 is descending. T4 is like a lagging indicator, so it's not going to show you everything as you need it for traders. Okay, the spike on the 13-minute chart happened right where this line is. So I just moved up. This is a 377 tick chart on the S&P, and when the spike to the upside started, you had this succession of waves going above zero, and you nibble here. When this goes up, you can nibble a little bit more, and you basically have this whole ride up here. Once this goes above zero, it's such a small tick chart that you use these for entry points, and then you use like T3 or T4 to bail out. So you can see here, this is the top, almost at the top of the spike by about 2 or 3 points, and then moves. Let me get rid of this. This here, it moves and it keeps you. T5 keeps you in the trade on the downside until it spikes up again. Right in this area. So you're not always going to get the exact bottom or the exact top, but and this is the nice run that you got from 1810 all the way 1850. You know, like a day later, or even the same day. And this just moves on. Some of these are come in really clean, like this area down in here when they move. You know, when I'm looking at these, I tend to ignore the little blippy waves, and I go for like big moves when there's a big 2 or 3 point move above the minor wave, which is what this is. I believe that's 2 or 3 points. This is 18. Let's call that 1847 to 1852. So that's about a 5 point move. When it starts moving above that, you start looking for the wave to go below zero. So on these very short-term tick chart time frames, you're only looking for like 2 or 3 points to the downside. When it goes above here, this is nice and clean, and especially because it bounced off of the minor wave 3 times, you can get 2 or 3 points moving up here. And when it comes down, this is above 1857 to 1850. That's 7 points above, so you could even begin shorting it a little bit back here. But basically, you're looking either for a move of the 21 to cross the 55, or you're looking for T1 to go below zero. So this is like a nice 2 or 3 point move right in here. So where are we currently? We're up 200, and these are all T1 through T5 are below zero. So this may be a short-term blip to the upside based on Thursday and Friday's move. Okay, in last night's video, it looked like all of these waves were, well, all these waves were above zero, and I was looking for gold to go up. Now, whether they were like big sellers who came in here, you can't always go by the long term. I think the gold is still going up because these are still either neutral or climbing, like this red wave right here. But for right now, let me show. I'm going to put a marker there so that we can, and then go to a smaller time frame chart. Let's put one there and one there, and let's see if we can see something on a smaller time frame chart that would have gotten us out at that point. Okay, so in spite of the fact that I thought it was going up, what indeed happened was that this was climbing up above, let's see here, hang on 1 second. This is climbing above the minor wave, comes back off and jumps off support. In the meantime, this is above zero the whole time. So you don't want to play any of these to the downside when it comes down below zero. But you want to take profits here and wait till it bounces back up. So you want to wait till it curves right up back here. It's just a little more cautious, a little more conservative. But these are, these are all like 10-point plays. You use this as a cautionary thing. It usually bounces off of the major wave, comes back into support. You look down here, it's still above zero. You look for this to go above zero. Bing, you're in here, there's another 8 or 10 points. But look what happens. This is like 2 days after it looked like it was nice and steadily going up. Then you hit this double tower area, and all of a sudden, you can't tell by the T1 and T2 because they're kind of above and below zero. But right here, the bigger lines and this, if you draw this straight up here, you get this move right here. So even if you were in it, you have to look, every time you're in a trade, the first thing you look for is an exit and a stop. So your stops would have been anything below this trend line, which is in concert with where T3 went below zero. So you could have kept this profit and even reversed it for like a 30 or 40 point play. So right now it's bouncing up to the minor trend line right here, and it looks like it wants to come down here. Not really sure where it's going to settle, but it looks like T1 is dropping below 0, as well as T2, T3, and T4. And this actually never went above 0 for this whole move up here. So this may have a little bit more downside, probably at least matching what's going down here around 1270. But we'll have to watch and see it. If you are a subscriber to the Triton Wave Consulting, then you will get that in an email or a text as soon as it happens. All right, let's take a look at Apple. Big picture on the daily. Let's move this out a little bit. All it did with this move from 511 to 527. I know it's a 16-point move if you're on the downside, but look at and see what happened with T1. The little white line has gone below 0 for the last 5 days, and these are also moving in the downtrend. This is below 0, and this has been below 0. Actually, it never went above 0 on T4, and also it's getting larger and larger to the downside right here. So these numbers are sequentially larger to the downside. So all this did was manage to come back up and hit the 21 period exponential moving average, and we'll have to wait and see what happens. But I like Apple still to the downside. Now if we look at a 144 on Apple, these times here are all just trading times during the daytime. It came back up into this resistance right in here, and T1 through T4 are all below 0. T4 is actually not quite below 0, but working on it. So a couple more hash marks, it'll be below 0, and that could take us down into this area right in here around 500. We look at smaller time frame charts here. Whoops. Okay, let's look at this. And very short term, this has gone above 0 on the 21. So let's look at a 5-minute and see what's going on. The 5-minute actually got you into either out of your temporary shorts, or because these all went all the ways went above 0 about 3 days ago and gave you that move. So like if you're enjoying a ride down here, like to this point, always look for an exit. Always look for an exit. Now in the case of the 5-minute chart, T1 goes below 0 here, which is around 526 right in here. But even more important than that, or just as important, is, let's move this out here. If you waited for this, you would be out of your long position that you took right in here. You'd be out of your long position at about 525. But if we expand this chart a little bit, and we see that the 21 crossed the 55 way back on April 8th at 522 on Apple, and it rode all this up. Now as long as this was, now the target would have been this minor wave right here. So from, let me see here, where was I? Oh, when this crossed, okay. Any of this area right in here, this is like a 3 or 4 point range, and you ride it up to here. Okay, then you start looking for an exit point. Now if you get these blips to the upside, even before the wave crossed to the downside right here, you had action between the between the 21 and the 55 crossing each other as they're crossing the minor wave right here. That is a classic, beautiful, not only cover your longs, but that's a classic short entry, and you don't have to wait for the wave to tell you to get in, because that is the entry right there. And that happens at about 527. So we're talking only a matter of difference of 2 points here, but it's just a matter of technique that I'm showing you right now. Okay, looking at some others, Tesla's had this nice move to the downside from its peak, and without Tesla, without Netflix, and without Apple, this market is not going to go higher. If the NASDAQ goes down because of these stocks, the stock market is eventually going to catch up. And this, as this is declining, okay, even on the 144 minute, the 21 crossed the 55, the wave actually confirmed the move that was going on here. And as long as this stays below, then the target was this Triton minor wave right in here. And as long as that stays, so this you can play to a bounce, and then just wait till it comes up to resistance at the 21, and since this is below zero, this is below zero as of trading on Monday. This is, you can see this 0.37, that will be below zero, and probably in another day or two this will be below zero, and T5 on the heavy red color is below zero. So I like Tesla to the downside. Now let me see if there's a, let me see if I have a target here. Tesla, let me see here. Don't really have a target. I don't have a target on Tesla. I just know it's going down. Here on the 21, you can see that it came down here, bounced between the major and the minor, came down here, bounced around a little bit for a couple days, then try to get something going, and then these slip below zero. T1, T2, and T3 and T4 were already below, so this is going back below an already established move to the downside on T3 and T4. So since this is a 21-minute chart, since these are established to the downside since March 11th, then any move to the downside on the shorter wave is confirming the downside. So this, you're in 210 down to about 185, or actually a little bit less, 183. So you wait till this to come back to resistance right here, which is the major Triton wave, and this looks like even if it comes up a little bit and goes sideways or tries to move in here, if you're lucky enough to get it in between 210 and 201, that is a good shorting opportunity, because this is going, my picture is that it's going down. Okay, here's a daily on Netflix. You can see that this hovered right on T1, hovered above zero the whole time until it got to this point right here. A little nib below here, right in concert with the 2155 crossing, and boom, all the way down here. This happened to be like a 300-point move. Sideways, sideways, sideways. So you can ignore what's going on here when there's such a massive move down. It kind of distorts the waves on number 1 and sometimes number 2, but you see it starts nibbling here at about $55, and then the big move is when this goes completely above zero, and then this moves completely above zero. And you don't have to be, you know, like a Wall Street billionaire to play this, but this went from 100 all the way up to 450, and now for the first time this is again below zero. This is completely below zero right here, and it happened right about, you would have missed unless you were looking at smaller time frame charts, you would have missed some of this, but you're in at 350, and I'm not sure what the price is right now, 345. But what I wanted to point out to you is this is now below zero for the first time since the stock was about $70. So we're talking about September of 2013. So, and this is below zero for the first time since back here at about 100. So Netflix, I like to the downside. It's just looking at smaller time frame charts for an entry point. Let's actually look at smaller time frame charts. Let's see if we can get anything from the 21. 21 just came back up to resistance right here with the T4 being below zero. Let me see if I can get a little more. This is the big wave down here, number 4, is still below zero. Let's look at a 5-minute chart to see how we can play this. And actually, a 5-minute chart is kind of like a fun chart. I like 5-minute charts on a lot of my stuff. Right here, this is like 15 points. Goes above, that's about 15 or 20 points. Goes below, or here, that's about 15 points. Comes above here. Now, since the longer time frame charts are below zero, you don't necessarily want to play the upside. You might get hurt a little bit, but goes down here, you've got the majority of this. When this comes back up, you've got that. So this is still into resistance. Okay, here's another 5-minute chart I like to look at, is Goldman Sachs. And below zero, below zero, below zero, below zero. One follows, it's like a sequence of waves that I love watching. You're in here, this is like, let me just like shoot a line right up here. Bing. It's right next to it, and you're going to take a little bit of heat because you're not going to get the exact point. Let's see if I can make that line straight. It's about 165, and that's about 162. But you got it all the way down to where this crosses, which is 156. So it's a nice little move. It's a nice little put move, or sell call credit spreads, or sell calls naked, however you want to do it. And then when it moves above zero right here, bing. Since this has been down below zero this whole time, this is one of your key entry points right here on T4 or T3 and T4 when it goes above zero, and there's like a 5-point move to the upside here. Right now it looks like T1 is below zero. It's hit resistance. It tried to get up here on Friday, came back down, even though Friday was expiration. I'm sorry, on Thursday. Friday was a holiday. And this is trending down. So for right now, actually, let's look at the daily on Goldman, see if we can see. Okay, Goldman's going down. Goldman's going down to, it already bounced off the, let's see here. Just squinch this up a little bit. This already bounced off the Triton minor wave on the daily, and since these are all below zero on 1, 2, and 3, on waves 1, 2, and 3, and it went into resistance right here, bing, I like 139.45 as a target for Goldman Sachs. Okay, so going back to the S&Ps, they're up 350 right now, so they seem to be ignoring the failed peace talks in Geneva about the Ukraine and about the shootings at some of the outposts there in one of the cities outside of Kiev. So it seems to be wanting to go up. This is a live chart. We're now at 1861.50. So we'll just have to see how that develops into overnight and the morning. But the main point is that when this went below zero and this went this has been above zero this whole time on lighter volume on the daily, and we go down here, it goes sideways, and then even though this has moved up, it really hasn't made an appreciable move. In fact, this is still minus -0.06. So, and this hasn't moved up at all, and this is trending down. So I still like the market on the downside and the stocks that I selected. That's all I have for tonight. Enjoy the rest of the holiday. Have a great evening, and I will see you at the next update. For those of you who are gold traders, you can pause this and look at the offer that I have if you want to become a member of Triton Wave Consulting. Have a great evening and good luck trading.